Brian Hicks from Angel Publishing is making a big claim. He says he's found a stock that will outperform Nvidia 10-1 in 2025, and almost no one is paying attention to it. Instead of paying nearly $3,000 for his newsletter, this video breaks it all down for free. No proprietary or paid information is being disclosed. Everything here is based on research and clues from his presentation. Hicks doesn't have much of a stock-picking track record to evaluate, so let's jump straight into the details of his latest pitch. He reveals that the stock in question isn't related to AI, quantum computing, or cryptocurrency. Instead, he points to a sector that's been on fire lately: gold. He claims certain gold stocks like Anglo Gold Ashanti have already been outperforming Nvidia by a factor of 10. He even shares a chart comparing gold stocks to the so-called Magnificent Seven tech giants, arguing that this is just the start of a massive run-up for gold-related investments. His reasoning? Hicks says gold is becoming the backbone of a new financial system, fueled by a major shift in how it's being used and traded. He says tokenization is unlocking trillions in untapped gold reserves thanks to blockchain technology. Gold is now tradable before it's even mined, turning it into a new liquid asset class. Additionally, he says gold-backed digital assets are gaining traction. JP Morgan, Citibank, and the London Bullion Market Association have already launched tokenized gold projects. Beyond finance, he claims gold is also playing a key role in emerging technologies, from quantum computing to aerospace advancements, making it more than just a traditional store of value. Hicks argues that smart money is flowing into gold, with central banks buying over 1,000 metric tons for the third straight year. Mining companies are scrambling to ramp up production, and demand has surged to a record $382 billion. Despite this, he insists the sector remains undervalued, pointing out that the entire gold mining industry is still smaller than some individual tech stocks. Hicks is vague about the exact investment he's recommending, but he does give one major clue. He says the best way to capitalize on this gold boom is through an ETF that holds both major gold mining firms and junior miners positioned for explosive growth. He calls it one of the best performing funds in the market, but still underappreciated. Based on these hints, the ETF he's likely referring to is the VanEck Junior Gold Miners ETF, also known as GDXJ. This ETF has gained around 40% in the past year, and is up 10% year-to-date, while Nvidia's stock has taken a hit. GDXJ is designed to track small and mid-cap companies in the gold and precious metals mining space, following the MVIS Global Junior Gold Miners Index. These mining firms generate at least 50% of their revenue from gold or silver operations. Investors turn to this ETF for exposure to the high growth potential of junior miners, which are smaller, more volatile companies with big upside if they strike gold, literally. There are several factors to consider before jumping in. First, this ETF is a high-risk, high-reward play. This ETF is all about smaller junior gold mining companies. If one of these miners makes a big discovery, its stock price can skyrocket. But there's a catch. Many of these companies are still in the early stages of exploration and might never reach full production or profitability, making them a much riskier bet. Another key factor to consider is GDXJ's strong correlation with gold prices. It doesn't just move with gold, it magnifies those price swings. When gold rallies, this ETF tends to outperform, but when gold declines, the losses can be even steeper, making it a high-risk, high-reward investment. Volatility is something investors need to brace for. This isn't a steady blue-chip stock, it's a roller coaster. Junior mining stocks are known for extreme price swings, which can lead to big gains but also sharp losses. Anyone investing in this sector should be ready for a bumpy ride. One advantage of this ETF is the built-in diversification. Instead of betting on a single mining company, investors get exposure to a broad portfolio of small-cap gold miners from around the world. This spreads out risk, reducing the impact of any single company's struggles. Liquidity is another plus. Since GDXJ is heavily traded with tight bid-ask spreads, investors can easily enter and exit positions without major price slippage. However, the ETF does come with a 0.52% expense ratio, fair for a niche fund but still something that slightly eats into returns over time. For traders, GDXJ's high liquidity is a major benefit. Its strong trading volume allows investors to move in and out of positions efficiently, making it an attractive choice for those who prefer active trading strategies. Finally, gold has historically performed well during inflation and economic uncertainty, and junior gold miners tend to benefit when gold prices rise. This ETF could serve as a hedge against market volatility, but it's important to remember, Just because gold has been strong in past crises doesn't mean gains are guaranteed. Gold prices have surged nearly 42% over the past year, reaching record highs of around $2,900 per ounce. While the broader S&P 500 has had a strong run, gold's outperformance has caught the attention of both retail and institutional investors. Despite this, gold mining stocks, including those in GDXJ, haven't fully reflected the surge in physical gold prices, presenting a potential value opportunity. Analysts have been raising earnings estimates for these companies, signaling room for further stock price growth. Short and long-term moving averages for GDXJ also suggest a bullish trend. Given all this, the ETF looks like a solid investment for those willing to handle volatility. Gold's momentum, combined with central bank accumulation and growing demand, suggests that the sector still has room to run. But as with all investments, risks remain, especially if gold prices reverse or the mining sector faces regulatory or operational challenges. For those looking for exposure to gold miners without picking individual stocks, GDXJ is a compelling option. It provides broad exposure to the junior mining sector, which has high upside potential but also comes with significant risks. The next few months will be key in determining whether gold stocks continue their strong performance or if the rally cools off. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide. Now, if you're tired of these so-called stock market experts blabbing about the same picks over and over again, I've got good news. I found an investing newsletter that completely blows the competition out of the water. They find highly asymmetric stocks with low risk and high reward, the kind you'll never hear about on CNBC or other major stock market news sites. I'm talking about companies like Ukrainian agri-producers during a war, or Bank Handlowy in Poland, a solid bank trading at insanely low valuations. These companies aren't flashy. Many of them produce boring products or provide services in oil and gas, banking, and agriculture. But here's the thing, they make money. And by investing in stocks like these, you can too. For a limited time, they're offering a 30-day trial for just $1. But as a thank you for watching this video to the end, I can do even better. Click the link in the description and tell me your best email address so I can send you their recent newsletter for free. It comes with 5 stock recommendations as well as high-quality market analysis, so make sure you check it out. You've literally got nothing to lose.